Hey guys, this is Rudy coming at you live from Palm Beach in Florida. It is Sunday today. It is April the 9th, and I thought I better make a follow-up video to the one that I posted yesterday, where I talked a little bit about 5 of your energy stocks, and well, some of yours anyway, and 2 of mine. The 2 of mine that I mentioned is Alliance Resource Limited Partners, which is a limited partnership. It's not a one-size-fits-all. Many people cannot invest in Alliance Resource Limited Partnership because it is a limited partnership. The other one that I mentioned is Colonial Coal. So in today's lesson on how to lose all your money, I thought I should dive a little bit deeper into Colonial Coal and explain and share a little bit of my investment thesis with you to make sure that you can avoid losing all your money. So let's take a look at Colonial Coal International Corporation. This is from their website. So at the bottom here, it says www.ccoal.ca. So ccoal.ca, which means Canadian. Western Canada's leading steel coal provider. Metallurgical coal development company. There are 2 primary types of coal. One is thermal, which is used for heating, water, steam, etc. The other one's metallurgical, which is used for making steel. So any steel manufacturer and any coal mining company and any related type industry, in other words, anyone who needs a lot of steel, even in the production process, might be a potential buyer for Colonial Coal, in theory anyway. They hold, so Colonial Coal holds a 100% interest in 2 resource stage coal properties. These are located in British Columbia in Canada, British Columbia on the west coast of Canada. NI 43-101, I'm coming back to that one in a minute, so just pay attention to that one. Compliant resources totaling approximately, let's call it 200 million tons of combined measured and indicated resources, plus another 200 million tons of inferred resources of hard coking oil have been estimated for the main deposit at Huguenot, which is one of their properties. The other property is called Flatbed, and there's about 300 million tons there. So I need you to stay with me here, because if we add up the assets that are in the ground, we're talking about metallurgical coal, there is approximately, just to make it easy for the guys who are not too smart and too quick on the uptake like me, 200 million plus 200 million is 400 plus 300 is 700. So we got about 700 million tons of coal in the ground, and it's all metallurgical coal. All right, with me so far? All good? Let's continue. Now, a few days ago, on March the 20th, 2023, so today is April the 9th, so basically 20 days ago, less than 3 weeks ago, I interviewed David Austin. David Austin is the CEO of Colonial Coal, and I posted that video online. So if you look in our library of past videos that I've done, you'll find this one quite easily because it's going to be near the top because it's relatively new. Now, my interview with David Austin was kind of like a fun interview for me to do, but unfortunately, we had some technical difficulties during the interview. So there are, if you invest 20 minutes or so to actually watch the interview, there are going to be times, not too many of them, where the, I think, Wi-Fi connection kind of broke up a little bit, and you're going to lose some of the conversation, but you can actually mesh it back together again by just sort of paying attention to what he says before and after. So even though some of the verbiage and discussion was lost due to technical difficulties, you can still follow the actual gist of the conversation. So what is this thing, NI 43-101 that I mentioned on the previous page, right? So just as a reminder, NI 43-101 compliant resources totaling approximately, so I said they have about 700 million tons of coal, and NI 43-101, the purpose of this national instrument is to ensure that misleading, erroneous, or fraudulent information relating to mineral properties is not published and promoted to investors on stock exchanges overseen by the Canadian Securities Authority. Now, of course, Colonial Coal is a Canadian corporation, and as a result, it would be under the jurisdiction of the Canadian Securities Authority. And they are basically saying, let me go back again, that their resources that they are mentioning on their website are any NI 43-101 compliant, which means these are as real as you get based on the PEA, which is the Professional Engineering Assessment. And they are under the guidance of NI 43-101, which prevents them, or certainly makes it less conducive for them to provide misleading information to the public. This is a little snapshot from the interview. So the good-looking dude on the left is David Austin from Colonial Coal, and the other weird-looking dude on the right-hand side is yours truly. So I'm just showing you a snapshot. This is the video that exists. You can pull it up on YouTube and you can watch it. Now, if the quality of my interview with David Austin is no good, and you prefer to watch something in much better, higher quality, there are several videos where other people have actually interviewed him, so you can actually look at some of these for yourself as you do your due diligence and decide where not to put your money so that you don't lose all your investments. Now, currently, Colonial is trading at around $2.18. It's Canadian. And don't be fooled here by this plus 11%. That was on Friday. On the same day, it actually pulled back in the United States because it trades on both exchanges. If we look at the patterns, the technicals here, so short-term patterns, indicators, oscillators, they're all bullish on an upward trend, regardless of which indicators you're looking at. Now, all that kind of stuff is relatively meaningless because it mainly is related to the actual stock price and the potential return on investment of the stock. Now, Colonial specifically is of less interest from a stock holding point of view, because we're not too worried about Colonial trading at $2 and then going to $3 or $1 or whatever. In other words, we're not looking to make a short-term gain or loss on the actual stock. We are actually looking for Colonial to sell the company and their assets that are in the ground to a willing buyer for a certain price, which I'm going to share with you in just a minute, based on some really simple back-of-the-envelope modeling. If you look on their website, you'll find information related to the actual properties, including maps to show you where the assets are located. So if you're wondering where the coal in the ground actually is, you can actually just go to their website and look up these things when you have time to do so. In addition to that, there are significantly detailed documents and PDFs you can download where you can actually read some of the information about the assets that are in the ground for yourself. Now, what they're doing here, for instance, at Flatbed, is they're saying that it's in close proximity to railway lines, roads, etc. In other words, there's no infrastructure that is required to be built around the open pit mining area, which is great because that means if a buyer actually decides to buy the coal, most of the infrastructure that they would need, like rail and road transport and that, is already in existence or within close proximity. How about the coal itself? So right at the bottom here, you can see it's premium hard coking oil. This is sort of right up there with the best level or quality of coal that you can get from a metallurgical point of view. As far as my knowledge goes, and in terms of what I've read, it's good stuff. And as I said, there's 700 million of it. Now, I just showed you the Canadian price a minute ago, and it was $2.18. And you can see that the trajectory of the two different equities, the blue line here being US and the mustardy yellow line Canadian, they kind of follow the same pattern, but they deviate sometimes on a day-to-day basis. So if you're a day trader or a swing trader, you could actually buy one, and then when it spikes, you can sell it, and then buy the other one if it pulls back and so on. What's interesting here is this is a 6-month chart, and if you owned Colonial Coal in the United States, you're up 73%. If you owned it in Canada, you're only up 58%. Only up 56 or 58 or 73% in 6 months. Not too bad, huh? That's if you're trading the stock, which I'm not doing. I'm actually just accumulating some shares. But you should never do what I'm doing, because you always need to do your own due diligence. On their website, you can pull off the PwC, that's PricewaterhouseCoopers Independent Auditors Report. So you can see that they have their audited financials. The last one available to us is dated July 31st, 2022. So it's getting close to being a year out of date, but that's the best we have in terms of what we can work with today. Here we can see the assets So I'm looking at the balance sheet, and I'm looking at the consolidated statements of financial position, and specifically the assets. Now, do not get confused between the asset line that you see here. So if we look at July 31, 2022, at the bottom there, it says $17.5 million. So on their balance sheet, they have 17 million or $17,600,000 worth of assets. But of course, don't ignore or forget that they own the licenses, 100% of the assets that are actually in the ground, which is not reflected on the balance sheet per se, because to be fair, the only asset that you hold until you actually take the coal out of the ground are the property licenses and your cash in the bank and cash equivalents and things like that, investments that you may have, etc. So the balance sheet in itself, which is usually my first go-to spot when I do due diligence, is a little bit sort of deceptive here, because I'm looking at the company's assets in terms of its book value as opposed to what's in the ground. But more about that in just a second. And this is just a second. So here we have the EIA report, so the U.S. Energy Information Administration report on metallurgical coal, and we can see that the price for the fourth quarter in 2022 was $233.47 per ton. Now, the blue line here is metallurgical coal, and the orangey line there is steam, or brown line is steam. So here's the math, right? So if you say in the ground there's about 700 million tons of metallurgical coal, and it's currently selling at around, let's call it $200, just to make it a round number. Then for the buyer, there's about $140 billion worth of coal in the ground, which obviously has a lifespan. And the buyer might say, okay, you know, this is this meets my requirements for the next 15 to 20 years, or whatever the case might be. But that's the sort of figurative value of the coal in the ground. So we have 700 million tons of high quality metallurgical coal in the ground. And the current price, which may pull back and may go up, is around $200 per ton. 700 million times $200 is $140 billion worth of assets in the ground, right? So if you look at their MD&A, which is the Management Disclosure and Analysis, which you can pull from their website, they will warn you, as I am doing now, about risks and uncertainties. And I've just given you two of those right here. The price of metallurgical coal could go up and it could go down. It could go $400. It could go down to $50 or $100. We don't know, right? And we do know that there's about 700 million tons in the ground, but can all of it be mined? Are the inferred quantities correct? We don't know, right? So we're working with round numbers, and that's why I call it sort of a back of the napkin estimate for ways in which you can lose all your money. One thing that they do when they publish an MDA, so Management Disclosure and Analysis, is to warn you about risks and uncertainties, and it's good for you to pay attention to those. So we know they have these two properties, the Ugoda coal property and the Flatbed coal property, and collectively together, they have about 700 million tons, and we know the price is around 200, just to make it a round number, makes it easy for mathematical purposes. Now, how about the liabilities? Well, the liabilities on the balance sheet are much like the assets on the balance sheet. The only thing that's good here is that Colonial Coal doesn't really have much in terms of liabilities, because there's no debt, right? So they're sitting on a sort of inverted mountain of coal, inverted because it's in the ground, which is an enormous asset that you can sell. But at the same time, they don't owe too many people money, and they do have some cash in the bank. So they're sort of okay, for the next few months or so, or however long it takes for them to actually sell the asset to a willing buyer. Now, the next thing we can look at over here, right at the bottom of the screen. So firstly, this is in common accounting language, this would be a profit and loss, but there is no profit because they're not making any revenue, right? So it's not a profit and loss, it's just a statement of loss and comprehensive losses. So you can see whatever it is that they're spending their money on, and most of the money in terms of the losses that they've incurred are related to share-based payments. And right at the bottom, you can see that the fully diluted average number of shares outstanding is approximately 175 million shares. All right, so we're going to round out that number as well, because I'm going to come back to that one in a minute once again. So stick with me here for just a second. When we look at the analyst coverage, there are no analysts that actually cover Colonial Coal, but there is a CFRA report It's reasonably new. It's April the 8th. CFRA says sell. The reason why they say sell is because their analyst report is based on the concept of investing in a stock in order to get a return on your investment on the stock. It is not based on the potential sale of the company and all its assets, right? So a lock, stock, and barrel. CFRA is basically saying Colonial Coal, right underneath there in small little numbers, you can see the price 218, April 6th. They're saying sell, it's probably going to go down. It might go down, $1.50, $1, I don't know. It could go up $3. If people are trading it, there's not a lot of volume, so it's not going to impact the price too much unless someone dumps, a few $1 million either in cash to buy shares or otherwise cashes out some of their shares. So from a stock performance point of view, the quantitative model drivers are overwhelmingly negative. The valuation is negative, the quality is negative, the growth is neutral, and the price momentum is negative. Because if you're buying it just to own the stock in order to get some appreciation, nobody knows where this is going to go. You might buy it at $2.18, and then in a week or two, it's trading at $1. And then you say, hey, Rudy, I'm down 50% on my investment. This thing sucks. Why did you tell me to buy it? And that's exactly why I'm not telling you to buy it. So let's go back to the math, right? So you would have remembered I shared with you 700 million tons in the ground at approximately $200 per ton. That's the current IEA price for Q4 of 2022. 700 million times 200 is 140 billion. But that's the value of the coal, the metallurgical coal that's in the ground. Now, I also shared with you on the first slide of this presentation that there is approximately 700 million tons, 200 plus 200 plus 300. So 400 approximately at Huguenot and approximately 300 at Flatbed. So right here at the bottom, I've done a little bit of, once again, back of the napkin modeling for you as a way for you to lose all your money. The sales price modeling is simply this. Let's just assume for the sake of argument that somebody, somewhere, and this could sell to a company anywhere in the world, right? Potential buyers are countries like India that are burning more coal than what they actually have. Potentially, maybe a country like China. Definitely a potential buyer would be in Japan today. And potential buyers could also include US steel manufacturers, for example. So there are a number of different geographical buyers that may step up to buy this. But at what price, Rudy? So how about, I don't know. So let's do this. We just make an assumption, right? I'm saying that coal is currently selling at around $200 per ton. Let's say the buyer, because remember, the buyer will need to spend approximately $500 million or so at each of these two properties. That's almost $1 billion in order to get set up to do development and extraction before they can actually start producing, right? So the buyer, whomever buys it, in addition to the purchase price, also has to fork out about another $1 billion or so, which is two tranches of about 500 million each in order to start mining. So let's say the buyer is really smart and says, you know what, I'll buy Colonial coal, but I'm only willing to pay $3 per ton in the ground, right? So in other words, I'm buying it today, lock, stock, and barrel, but I will not pay you more than $3 per pound in the ground. So let's assume that's the purchase price. 700 million tons in the ground, multiplied by $3 per ton is $2.1 billion. On the previous slide, I showed you there's approximately 175 million shares outstanding, fully diluted. If you take $2.1 billion and you divide it by 175 million fully diluted shares, you get to a share price of approximately $12. Now, sticking with simple math, in order to make sure that you understand fully how you can lose all your money, if you purchased Colonial coal for $2 and the company is sold for the equivalent of $12 per share, you have just generated a 6x on your original investment. Now, if you were to think of investing at all, and you say, how much money should I invest in this at all, assuming I was silly enough to actually put my cash into Colonial coal, then I would respond by saying, on your last newspaper round, you earned yourself $20. Maybe you just want to invest $20. and take a chance with money that you can afford to lose. I hope I'm making sense, right? I'm trying to make light of this, but at the same time, high risk always is commensurate with high return. And high risk, by definition, means that you could lose all your money. So guys, in a nutshell, this was a lesson not about colonial coal or metallurgical coal or coal in the ground or M&A, mergers and acquisition, as a basic lesson or an educational session for today. It was actually a lesson on how to lose all your money and what not to invest in. Now, the reason why I made this video is because after the one that I posted yesterday, where I shared 5 of your energy stocks and 2 of mine, and as I said at the beginning, Alliance Resource Limited Partners and Colonial Coal are 2 of my coal stocks that I've been buying. A few people on the channel and in a variety of other ways, in addition to comments on the channel, said, tell me more about Colonial Coal. And I thought, you know what, in the interest of being transparent and being honest with you and making sure that you understand that whatever I do, you do not want to copy. What I do, you need to do what's right for you. And in the with the intent of doing that, I thought I'll make this follow-up video specific to Colonial Coal. If you want to invest any money into Colonial Coal at all, do your own due diligence, take a deep dive, read anything you can find, watch all those YouTube videos. There's at least 3 or 4 or 5 of them. You know, watch them, take a little bit of time, invest. I don't know, it's probably going to be an hour of your time before you put any money into something as high risk as Colonial Coal. I hope it's helpful. And if you do whatever it is that you do what's right for you, and make sure that you protect your assets under investment, and that you look to build generational wealth on an ongoing basis, and don't take silly chances. That's it for now. Take care. Bye-bye.